more people trickle onto the call. Welcome everybody to the National Housing Resource Center Leaders in Housing Counseling call. Glad you are all here. We've got a jam-packed agenda chock full of lots of different items. We're trying to play catch-up. There's a lot happening in our field, and we're going to jump around and I think try to catch as much as we can on this call, and we'll have a little bit of room for discussion on some good topics about things we need to deal with immediately. So be prepared to use your chat box or question box, whatever it's called. We really appreciate and use the inputs that you give. So let's get started. So Matthew, let's start out with legislative updates. So what's happening in the housing counseling funding field? So there unfortunately is not a lot to report. We just wanted to kind of touch on this because there have been some slight developments in the last couple of weeks. Just by way of reminder on the numbers we're working with on the House, it's $47 million for HUD housing counseling assistance after the Charlie Dent amendment got it up from $45 million, and $50 million for NFMC. The Senate just a little bit higher with $49 million for HUD housing counseling and $50 million for NFMC. So the full House has moved their THUD appropriation. The Senate, the full Appropriations Committee has moved it. It was due up for a vote by the full Senate. I guess it was a couple weeks ago now. But unsurprisingly, a dispute between the Republicans and Democrats, basically on how they were going to allow amendments to be introduced. They couldn't agree on that, so it didn't come up for a vote when it was supposed to, and now it's kind of gridlocked once again, at least as far as the appropriations bills go. So that's where we are. Not much of a report, but just wanted to keep everyone updated on where things are. Great, and I know you've been doing some work on trying to figure out how to develop more Republican support for our work in general. So do you want to give us a quick analysis there? Yeah, so and this is more of a asking for help from folks on the call. So like Bruce said, we're working on, and it has a lot to do with the success that we've had, the legislative victories we've had as a result of Charlie Dent up in the Lehigh Valley. And we've for a long time have been wanting to expand the relationships we have with Republicans who are willing to work with us, and so we're just trying to make a little bit more formal push to do that now. So we're working on identifying Republicans who folks think we may be able to build a relationship with. It may be because they're relatively moderate, which is the case with Charlie Dent. Could be folks that you just have a very strong relationship with, which is also the case with Charlie Dent and Alan Jennings up in the Lehigh Valley. But it also just may be that you're in a state that's still has really high foreclosure numbers, and that even if your rep is relatively conservative, that maybe they believe in housing counseling. So it could be any number of reasons why you might recommend someone, but we're just trying to identify as many Republicans as possible to start. So the plan will be to set up meetings, maybe some in district maybe we'll get some counseling agencies together in district, and we'll also surely we'll visit them on Capitol Hill. And maybe it doesn't pan out, but if we can build a good relationship with 4 or 5 more Republicans, especially in the House, then we'll be in a much stronger position going forward.
So if you have suggestions, we would love to hear from you. You can email me, email Bruce, send a chat or in the question box right now. But yeah, we'll appreciate any input we get.
Great. This will become very useful over the next year. So especially these numbers in the budget will go to conference committee, and having Republican support will be critical to keeping the numbers up and trying to get them as high as possible. We'll also be interested in seeing if there's some ability, once we've started dealing with the funding issues, to see if we can do things around GSC reform and things like that as well. But let's focus first on federal funding. So any Republican relationships you've got, send them to Matthew right away. Thank you so much. Okay, so next on the list we have a new Secretary of HUD. So Julian Castro was confirmed by the Senate 71-26, and when we wrote this, we were still waiting on the vote for Sean Donovan, and in the last half hour, the vote went through, and he was confirmed as the new OMB director, 75-22. So he actually got 4 more Republican votes than Castro did. We'll be interested in knowing who they are. But actually Castro did okay, and on his own got 18 Republicans to vote for him. Youngest mayor in the country. I'm wondering if he's probably the youngest Secretary of HUD, and has a bright future in the Democratic Party, and so a lot of hopes for him. And but doesn't have a ton of history around our issues, and we'll want to try to communicate as early and quickly as possible, and I've already reached out to HUD about that. But it'll be exciting. It'll be interesting to see what role he plays in things like the settlements, where Donovan did a great deal of leadership, and it'll be interesting to see on things like federal finance reform, where again Donovan had a big role. Okay, so our next topic is around the CFPB, and we were invited by the CFPB to be involved in a discussion on the settlement booklet that everybody gets, and now under Dodd-Frank they're required to get 3 days after making loan application. They actually invited the housing advocacy community, and there were a couple other advocates from the National Consumer Law Center and the National Fair Housing Alliance. But the conversation was totally dominated by a team of housing counselors. There were about 10 housing counselors on the call. We're all coming from our universe, from our list, and we appreciate the fact that everybody was so active in the conversation. But I thought we'd invite a couple people in. Sylvia Alvarez, many of you know her from the Housing and Education Alliance in Tampa, and Loretta Kelly from the Native American Youth and Family Center in Portland, Oregon. So I'm hoping that they're patched in. Sylvia and Loretta, are you there?
Yeah, this is Loretta.
Oh, great, Loretta. And Sylvia, do we have you? Okay, well, Loretta, let's get started, and hopefully Sylvia will be able to connect with us. So Loretta, what was your impressions about what the message was coming from counselors to the CFPB about the what should be done about the settlement booklet?
So I think that the major, the thing that we were trying to really get across is that while this is a great booklet at 71 pages, it's just too long. And the second thing was that it's coming to people far too late in the process these days. It's connected to, it has to get there 3 days after a good faith estimate has been issued, and really that's pretty close to the end of the home loan process.
Yeah, exactly. And I mean, it was an interesting conversation. I think people also said that people don't really read that much and have to figure out how to make it work. And there was a number of counselors who said, really what you need is you need to be working with a counselor and to walk you through the process, and that's really the best way to transmit the information.
Right, and a number of us mentioned that this would be a great tool to use in our counseling or as part of our homebuyer workshops, that it really is a useful thing, but it's just coming so late. There were a few people that suggested that maybe it come in a video format, something that people could link to and watch.
Yeah, and there was this conversation also about taking a few 4 or 5 big headlines and making that what people first see, and maybe that's online or maybe that's on paper, and then everything else becomes documentation behind it. But that there's 4 or 5 big ideas that people should be aware of. For example, you should go to more than one mortgage lender to find the rates and do a price comparison, things like that. You should go to a housing counselor.
Right, which is completely missing from the current version.
And I would say, actually, in their defense, it does show up in a few places. But you're right. They're like at the critical points where there were, should you be worrying about the pricing on your mortgage, you could say, well, check with your housing counselor. They don't actually see that there. It's kind of this, whoa, just missed that train completely.
Right,
yeah.
Exactly. And there's a great graphic at the beginning of this document that is like the timeline for your purchase, which completely negates the use of a counselor at all. It's not included in any way.
So interesting process. Did Sylvia join us at all? We haven't been able to connect. There must be a short circuit there. Well, and I think the process on this will be that they're going back to the drawing board. I think they heard clearly what people were saying, and that was a win. So we're not sure what the next step might be, but hopefully we'll revisit as things progress. I think the win was that we had real people in the field, had lots of experience, who were saying pretty clearly, this is not a usable document, this is what you need.
Right, I agree.
Yeah, good. So on our side, we're going to do our own work on trying to create some materials for people, for counselors working on high-cost loans and negative amortization loans. And so we're putting together a task force that should meet next week and start trying to work on those kind of materials. We do have a good group of people who have, I think, a lot of experience on this, and I'm hoping Sylvia and Loretta will be part of that team as well. And if you're listening to us right now and you really have lots of experience on doing this kind of stuff, we're going to have to make some pretty clear decisions about how to manage what can be very toxic loans. So I'm very interested in how to figure out how to do this in a way that is helpful to people. But we'd like to create a document that would be in some form that would be useful to the whole housing counseling industry and kind of solve a gap we've got. This is our first try at doing something like this, and we're going to learn by doing it this way, and then hopefully there'll be other times when there's things that the industry needs, and we'll be able to step in, get a team of people together, and provide the right materials at the right time. Well, good. Any closing thoughts, Loretta?
No, I think we covered everything pretty well. It was a good little session, very fast.
All right, chop.
There are a couple, one comment, one question that I'll just jump in with.
Okay.
Yeah. The comment is from Brenda Terry, who just said that she loves the idea of the video format. And then the question was from Rosella Para, who asked if the booklets are available through the CFPB's website. She said she wasn't able to figure out how to order them and thought they would be useful.
Yeah, so they were pretty clear that you couldn't order them. You had to print it off. It wasn't. I actually laughed when they said this, that it wasn't in their budget to print these for us.
That means it must be in ours, huh?
Right.
So, yeah,
exactly.
So you can get it offline, and Matthew, when you do the summary, why don't you include that link? It was in the first link that I sent out a while ago, but yeah, why don't we just include that again, and you can take a look at it and use it as you see fit. But the problem is they're not printing them, and I mean, I hope that if they create an online version, it's more usable as an online version rather than as a PDF that you look at. Well, thanks so much, Loretta. Sorry we didn't connect with Sylvia. We'll have to try that again another time.
Yeah, thanks for the opportunity.
Good. Okay. We'll keep talking. All right. let's see. Oh, so next thing is the big news was the SunTrust settlement. $320 million settlement, which was a criminal investigation, and it was started by SIGTARP. So SIGTARP, as you remember, is the special, I forgot what the title is, but it's the Inspector General who's specifically working on TARP or HAMP issues, the troubled assets. And they did a deep dive into SunTrust, ended up with a pretty big settlement, given that SunTrust is a regional bank and not one of the largest. There was a restitution of $179 million that will be going mostly to borrowers. $10 million will go to Fannie Mae and Freddie Mac. And in fact, they have to set aside an extra $95 million, or they have to guarantee that they will come up with it if the $179 isn't enough. They're forfeiting $16 million, which will go to law enforcement agencies that are working on mortgage fraud and other issues related to the misuse of TARP funds. And then there'll be $20 million for prevention, which is going to housing counseling agencies and also to nonprofits devoted to consumer counseling and advocacy. That'll be distributed not by SunTrust, but by a grant administrator. So we're trying to figure out who the grant administrator will be. We're trying to figure out if there are parameters around this. Frankly, all we really have got at this moment is the press release that SIGTARP has put out. We've reached out to SIGTARP, and we'll try to follow this up as much as possible and try to keep people up to date about what the opportunities are. I don't know what the parameters are, but I'm guessing that it will be aimed at SunTrust's footprint and the states that SunTrust does business in. We've got listed on your screen right there. So as you can tell, it's a southern but really southeastern bank, and gets as far up as Maryland and Washington, D.C., and as far west as Mississippi and Alabama to Arkansas. So one of the things that's really striking about this is how angry and dramatic the statement was from the SIGTARP person who was leading the case. And so, Matthew, I'm going to ask you to just read that one paragraph from the settlement so people get a flavor of this from the press release.
All right, so this is a quote from Christy Romero, who is the Special Inspector General for TARP. She said, HAMP was designed to be a beacon of hope and opportunity for homeowners in dire straits, but TARP recipient SunTrust, rather than assist homeowners in need, financially ruined many through an utter dereliction of its HAMP program. This criminal investigation uncovered that SunTrust so bungled its administration of the program that many homeowners would have been exponentially better off having never applied through the bank in the first place. Unwilling to put resources into HAMP despite holding billions in TARP funds, SunTrust put piles of unopened homeowners' HAMP applications in a room. SunTrust floor actually buckled under the sheer weight of unopened document packages. Documents and paperwork were lost. Homeowners were improperly foreclosed upon. Treasury was lied to. The negligence with which SunTrust administered its HAMP program is appalling, miserable, inexcusable, and repulsive. Real people lost their homes and many others faced financial ruin. Ending this behavior and, where necessary, forcing institutions to change their culture through law enforcement by SIGTARP and our partners will help begin the process of restoring faith in financial institutions and healing public trust.
Well, this is the strongest statement I have heard on certainly in any of these settlements, but also from anybody who's a regulator, prosecutor, or enforcer. Pretty amazing stuff. So we will keep you informed as much as we can learn as soon as we learn it, and we'll post that to the listserv and provide information on these calls as we learn them. So we're also, as you all know, working on trying to help with figure out how well the servicing standards are working with the CFPB. And we have a joint project with NCLR and us on doing a survey with housing counselors to really get an assessment of what's working in the field. So, Matthew, how are we doing with this?
We're doing well, but we really need to do better. We've had a good number of responses. I think we're around 100 or so for folks that made it through all or most of the questions. I would really like to see us get over 200 or so by the time we're done. You know, with something like this, it carries more weight the more respondents you have. It gives a better idea. You know, it's helpful to have as many states as possible represented. You know, you want to have as broad of an area covered as possible. So I would definitely urge anyone that's, well, first thank everyone that's on the call that's already done the survey, but if you haven't, would definitely urge you to do it. It's a fairly in-depth survey. I think it should take about 30 minutes or so. But again, just the link is on there, and I'll circulate the link again after the call. But it really just can't stress enough how useful it's going to be for us to be able to have conversations with the people at CFPB who are working on tweaks to the rules, to be able to give them hard numbers of what people in the field are reporting. So that would be really helpful for anyone that's not on the call. That not anyone that has not done the survey already. If you could do so, we would really appreciate it.
Great, and we'll send the link out. It's right there, but we'll send it out on the summary as well. And actually, the CFPB has already said they want to look at it closely, and they, in the past, have said they've looked at our surveys and others as major tools in evaluating what they do and what repairs they might do to the servicing standards and other rules. So, thanks for all your participation. And Matthew set us a bar of 200, so let's try to go for it. Okay. And so the next one is we had so we had Sergio Rique on our call a couple weeks ago, and we're really we've been spending a lot of time thinking about HAWC. It's obviously a huge opportunity in our business. We have been so HUD is asking for comments. I think Matthew has circulated what our first draft on it. So Matthew, where are we at, and what should people know?
Yeah, so I will kind of hit some of the highlights of what we circulated, but would definitely urge people that are interested. Well, I know everyone's really interested in HAWC. If you have a few minutes to go through our comments and send feedback, that would be really helpful. We are asking for feedback by Monday at 9. Comments are due Monday. They don't specify a time, but I think treat it as close of business on Monday. If you are interested in submitting comments, I kind of put some instructions on there, but it's really easy to do. You just go to regulations.gov. There's a big search screen right in the middle on the home page. If you just do a search for HAWC, it'll bring up a bunch of results, but the very first result is the one that you're looking for. And on the far right-hand side of the screen, there's a light blue Comment Now box. You just click that. It asks for just a few pieces of personal info, and then you can either just type your comments into, there's like a text box where you could enter comments directly, or you can also post something as a PDF, or I imagine as a Word doc, however you would want to post something. If you're interested and have any issues, definitely feel free to give me a call and we can go through it together. But so for our comments, I'll just hit, I'm not going to go through everything, but just some of the highlights. We spent a good bit of time talking about the recommended payment structure that HUD has in there. So this is not, it's not a requirement that every agency use this. they're very careful to say that people can kind of do whatever they want so long as it's within the rules. But I think it's fair to assume that what they recommend is going to kind of become the standard, and so I think this is an important area. One of the points we made here is that they really need to get it right in terms of how long it's going to take to do the required counseling and to set up the recommended payment structure accordingly. I'll actually come back to that in a second, because that was another big thing in another section is we don't think they were getting it right in terms of how long it's going to take, and that would throw off therefore the fees they use for the minimum required counseling time, and in some cases the maximum amount that can be reimbursed. One of the other things we talked about here is, so their proposal is basically the borrower covers, so there's three kind of segments. There's the pre-contract counseling and education, the pre-closing counseling, and the post-closing counseling. They basically suggest, they recommend that the borrower and or the counseling agency or some combination pay for the pre-contract closing, which they estimate is about $300, and they recommend that the lender reimburse the borrower or the counseling agency for the second one, for the pre-closing, and that they give a voucher that can then be used to be reimbursed for the post-closing. So the borrower agency for step one, and the lender essentially for steps 2 and 3 paying for it. We did, and part of they make the point a few times in the proposal that they think that borrowers should be paying for some portion of the counseling, which I think most people agree that there's something to. Maybe not everyone agrees on that, but they make the point that borrowers are going to save a fairly significant amount of money through HAWC, so asking them to contribute to it is not unreasonable. But we made the point that especially for folks who are most need and will most benefit from HAWC, that asking them to pay up front could scare off some of the most, or keep away some of the people that could benefit the most. So what we suggested is using a sliding scale, so that, and that HUD would presumably issue guidelines for a sliding scale, but it would be income-based. So if you're very low income, maybe you would not pay anything, or maybe you would pay $50, and that the lender should be required to reimburse the agency for the difference. So that if the cost for the agency is $300, it's a very low income borrower that you ask to pay $50, that then the lender at closing would reimburse the agency for that $250 shortfall. So we think that's a good idea, and hope that they'll agree with that. We also suggested that they should look into ways that servicers and investors can be brought into the payment structure, and they do mention a few times that they want all the parties that will benefit from HAWC, including servicers, to help pay for the cost of counseling and education, but they don't actually say what that might look like. They do say they'll look into other payment structures, so we'll see what happens with that. And I did flag that as a area that we would be happy to have suggestions from people on. If you have any thoughts on ways that servicers and investors can be brought into helping pay for it. I do have a couple questions, so I'm just going to read and hopefully respond to this one question from Kenneth Bigos. How will the client know that they are obligated to attend counseling because they are receiving a HAWC loan? Will this be at the time of pre-qualification prior to signing the agreement of sale? So to the first one, they're pretty vague, and that's actually one of the areas that they ask for comments on in terms of how the marketing will happen. I think they've been pretty explicit, maybe not in the proposal itself, but certainly when they've talked about it, that they think real estate agents are going to be the primary marketing mechanism. But I think it's also fair to think that counseling agencies will be as well. So that's
You know,
kind of to be determined.
And actually, this is actually a very good point, and one that came up a little bit when we were talking with Sarah about this. If the primary marketing vehicle ends up being real estate agents and loan originators, they will come with the perspective that counseling should be done as quickly and as abruptly as possible, and maybe as last minute as needed. And I mean, it would be great if HUD did its own marketing and we were able to get out in front to consumers directly and be able to create a more positive image about what counseling is and why it's important to go through the whole thing, and make sure that you give plenty of time in the process so that you're getting to the counselor before important financial decisions are getting made. This kind of echoes the conversation we had about the settlement booklet. But we probably should beef that up a little bit in our comment, I think.
Yeah, we absolutely can. And then to the second, will this be at the time of pre-qualification prior to signing the agreement of sale? So the first step of the counseling, it's 6 hours of education and counseling. It needs to be completed at least 10 days before the contract is signed. So I think that could be after they were pre-qualified. It may be before, but it may be after a pre-qualification, but it will be before signing the sales agreement. So sorry, to get back to some of the points we made, and then we're going to have a quick discussion. The required content and duration of the homebuyer education and counseling. So we had did the survey, which is actually still open. If any, I'll include the link to that as well. This is just a very quick survey with 3 questions, basically listing the required content for each of the 3 rounds of counseling and/or education, asking if there's any they missed or if there's any that are unnecessary, and then asking how long would it take you to get through this counseling. So, for example, with the last step, it's the post-closing counseling. They frame it as a minimum of 1 hour required, but it's 13 topics, some of which are fairly in-depth conversations. People weighing in so far in the survey, by and large, are saying 2 to 3 hours. Some people are saying a lot more. Very few people are saying less than 2 hours. So, there's a lot of concern that if they set it up, though, as the minimum of 1 hour, it kind of creates a race to the bottom, and people are just, you're trying to be competitive, you're trying to save people money, trying to get through it as quickly as possible. But we think it's very important for them to get it right, that if it can't be done well in less than 2 hours, that they require the minimum of 2 hours, and that they set up the payment. The other issue with that is that the way it's set up, the way that gets paid for is the borrower pays for it. They get a voucher at closing for up to $100, so that's kind of the max that is going to be reimbursed from the lender. They go through that last step of counseling and then send in the voucher along with the certificate that says they completed it, get reimbursed up to $100. The reimbursement should be much more than $100. There's no way that counseling is going to be done in 1 hour. So that's a big concern. So we're also going to submit to them just the raw, unedited responses to the survey. We're going to take out any personal identifying information, but we'll give them the Excel sheet with just all of the responses. So also a good reason to weigh in on that. Then those were kind of the 2 topics that we spent the most amount of time on. We did also say it shouldn't just be limited to first-time home buyers, that it should be open to anyone who's taking out a FHA loan, and including refinance borrowers. I think that's, we made some other kind of less substantive points, but I think those are the most important ones for now. There are a list of questions. I'm going to turn it over to Bruce right now to talk about. We have this discussion topic on here about whether they're getting it right with the costs that they estimate for it, and I'll Bruce will lead that, and I'll go through some questions and come back.
Okay, so one of the areas we're concerned about is the pricing here. And kind of the assumption is that HUD says that if you price out housing counseling, that they're saying that generally the maximum cost would be $100 per hour for one-on-one counseling. And so that would not only include the housing counselor's time, salary and benefits, but also overhead costs and administrative costs, supervisory costs, the entire package. And what they did, and the idea is that if there are extra costs that can be justified, then that's fine, and you can charge more, but you'd need to be able to justify to HUD that the costs were higher than that. And the assumption is if the costs were lower than that, you would charge whatever the costs are. And then and they wanted to figure out a way of pricing out the group education sessions. And they don't make a distinction between whether you're doing this online or on telephone or Skyping it or doing it in a classroom setting. But the idea was $150 per household, and that would be for about 4.5 hours of home buyer education. So we were interested in thinking about and just hearing what people's reactions were about whether that does capture the real costs and is a good reflection of these, or if the numbers are too low. And it's helpful to have this in the sense of what your experience with your agency is. So if anybody's got reactions or thoughts like that, we'd love to hear them so that we can help incorporate those in our comments that we'll submit by Monday. So does anybody have any?
Maybe I'll take some other questions and give folks a second to kind of weigh in on that. And if you do, you can use the question box to weigh in, or if you're connected by phone, you can raise your hand. It doesn't work if you're using the VoIP. But all right, so Ethan Pope said, glad to hear about real estate agent comments. Are real estate agents required to fully disclose at the time of connections being made with housing agencies that their client is a HOC referral? I don't think that there's anything on any of that actually in the proposal. It gets more into the kind of mechanics of the counseling. I don't know that they even actually mention realtors in the proposal. They may kind of in passing, but I think they've kind of given the suggestion that it's going to be their expectation is that realtors are going to be the kind of primary marketing mechanism, but they certainly haven't expounded on what that might look like. So I think the answer to your question is that there's nothing in there on that.
Does it make sense for us to try to put something in on our comments about this that would be maybe probably HUD doesn't have the ability to require realtors to do it, but maybe there's some way they can encourage that. I mean, here's the weirdness of all this is that the real estate agent may have some very specific ideas about what the mortgage product ought to be, but when it gets to the counselor might have a better match with some CRA product with down payment assistance, and might be a more appropriate match. But so it doesn't mean that the real estate what the real estate agent says is what the counselor would recommend to the client. They probably should give them a variety of options. But on the other hand, it's helpful to know if that's a piece of the pie, a piece of the expectation.
I am going to go. Hopefully, Laura Buxbaum is here with a question.
I'm here. Can you hear me?
Yes. How are you, Laura?
Good. I think those prices are not bad, actually. I think that would cover our costs. But I have a couple of concerns. One is there would be prep and follow-up, certainly for the one-on-one. Not extensive, I don't think, but a half hour to an hour prep, and I don't know, I think follow-up would depend on the situation. I'd be more concerned about the minimum 1 hour issue, because I think it would take at least 2 or 3 hours to do a good job. For the homebuyer ed, I just want to note that in Maine, our homebuyer ed series are a lot longer than 4.5 hours, and they're required to be. Jason's on the phone, he'll correct me, I can't remember if they're 8 or 10 hours. And so we couldn't do it in 4.5 hours unless we had a special class, and I'm not sure that would make sense, because we have a very comprehensive homebuyer education class that we already offer. So I don't.
I will jump in and say that
I don't know. 4.5 hours is.
It's definitely just the minimum, and it's a good thing that it's a statewide requirement. Then if everybody has to play by the same rules, then it's going that then everyone has to offer that 8 hours or 10 hours, whatever it is, and can charge accordingly. I assume they would just expect you to prorate that 150 to 300 for 9 hours and or whatever it might be.
Jason just told me it's 10 hours.
Yeah.
Yeah, but it's just a question again of who's going to pay for that. We get some funding through our state housing finance agency. We would never charge a household $150 for the class. I think that would be too much to charge them. And if it's longer, if it's a 10-hour, then it does cost us more than that. In other words, and I'm not sure we can make up the difference with our current funding.
Absolutely, and that also assumes the way they have it. It also assumes $150 for the counseling component of that pre-contract. So they figure it as $300. It sounds like for you it would be closer to $450. That according to their proposal, it would either be the borrower or the agency, some combination of those two. That's why we definitely recommended that the lender should be contributing to that as well.
Yeah. You know what? I have to go back and do the math. I'm not sure. I think actually 150 might actually cover it if we did have, say, 5 households. That would probably cover our costs just about.
And do you typically?
But the issue of harmony. Oh yeah, we actually won't run a class unless we have at least 6, because that's how our funding works now.
Right.
But they wouldn't obviously. I mean, that wouldn't be just Hawk. Obviously, that would be everybody. The whole.
Right.
That's helpful. Yeah, I think it is an important question of what is that break-even point for at that that kind of cost estimate. I'm sure it'll vary from by geography and urban, rural, and that sort of thing. But yeah, people definitely flagged concerns that the 150 for 4.5 hours could, in a lot of cases, might be fine, and it might keep you even. But if there's fewer than 5 or whatever the number is, then it ends up being a losing proposition for the agency.
Yeah.
All right. Good. Thanks, Laura.
Should we stay on this, or do we have to move on, or?
We have a couple more minutes, and if there's a quick pause, I just want to point out. Ellie Pepper pointed out that SunTrust is in New York State. That was not on our list, so it sounds like we have an incomplete list of what states are represented by where SunTrust has its footprint. So that's, I think, good news. It means it's more organizations could benefit if their funding is limited to where their footprint is. So we'll go look for a better list of where SunTrust does business. But New York, I just Googled, and Ellie's right, and that's good to know.
I will say we have Song Hutchins would like to make a comment, but I can see that you're not on the phone, Song. So if you can call in, we would love to have you make a comment. Someone asked about if there will be a list circulated to lenders or realtors, or how to get on a list that will be circulated to lenders or realtors. Again, they don't specify that they're going to do that exactly, but they do say that they'll, at least for the initial, the kind of phase one of it, which is the phase where it's kind of working out any kinks, they will put together a list of participating lenders and agencies, and they will do that for phase two as well. That will happen. I don't think that you're going to have to do anything specific. You'll have to be a participating HAWC counseling agency, but they will, I think, handle any circulating lists to for marketing purposes and that sort of thing. A comment from Sherry Pace: a 4.5-hour class is going to involve more hours for prep time, travel time, post-workshop follow-up, plus food, snack costs. Agencies in rural areas have different costs than those in urban or suburban hours. Yeah, I agree with all of that. One person had estimated that a 4.5-hour class probably meant more like 9 hours of at least 9 hours of staff time, and that that does also assume that you're only having one staff person. If you have a second, maybe that looks more like 12 or 15 hours. And the concern about especially rural populations is a good point. The one kind of good thing, and we did go make a point to kind of praise HUD on this part of the proposal, is that you can deliver the counseling by really any means that that you want. So you could do internet-based counseling, you could do phone counseling, or for the education, you could do that by phone as well. So that does help a little bit for agencies in rural areas to help you get up to a number that'll make it work for your agency. We have someone saying Sherry Pace saying she agrees with Laura. Our current education class is 8 hours. Borrowers then may also receive face-to-face counseling. We do not charge borrowers for either portion. So that's something I think in light of these conversations, and we may reach out to a few of you, maybe we'll elaborate on that. We didn't really get into the pre-contract counseling and education component. We did a little bit, but maybe we'll elaborate on that and just talk about that. It'll be interesting for people to weigh in, and if other people think 4.5 hours of education and 1.5 of counseling is reasonable, but I'm sure it's worth pointing out that in some states it requires 10, and they kind of need to figure that out. And I mean, the 6 is just a minimum as well. So if your agency, if your model is 8. You're free. You're absolutely free to do 8. The difficulty, obviously, then though is how do you get paid for it? So it's a lot to kind of think about with that. But I do think that it's important that we advocated for, and maybe we should even expand on the idea that lenders at least need to be brought in to be able to help pay for the pre-contract counseling and education. I think that we should point out to HUD that the cost may be significantly more than $300 in many cases, and that expecting the borrower and counseling agency to kind of split that cost is maybe not fair. We do have some more comments.
I'll just take one more.
All right, and I'm just going to read from Ken Bigos again. First, I'm not opposed with charging borrowers for the home buyer workshop and counseling. However, our problem with charging clients for the workshop and counseling under HAWC is that we could create a double standard for clients that are not charged for the same counseling services. Plus, in Philadelphia, there is a lot of housing counseling agencies, so there is a race to the bottom. I do think the race to the bottom is an important, and I think we use that term in the comments. I think that's an important point that HUD needs to be really aware of. I mean, they definitely they make it pretty clear that they like the kind of, that they're not stepping in, they're not setting prices, they want there to be competition, they want agencies to set prices according to, whatever factors they want, and they want there to be competition out there, but they need to realize that they need to be concerned about this race to the bottom, and that's, especially in the context of this, if the minimum amount of counseling required is way under what it actually takes, then there's absolutely going to be a rush to the bottom for some agency to, come in and just blow through everything and, be cheaper by $200 than an agency who's doing it right. So I think that's a good point, and all of these comments have been good. It's a little tough to read them and talk about, process them while we're on the phone live, but I'll definitely look at them all after, and we'll adjust our comments accordingly. So thanks everyone for weighing in. It would also be great though if folks still want to send any written responses to what we circulated. That would also be extremely helpful. So thanks everyone for weighing in on that.
And remember that you can use the you can file your own comments under regulations.gov. You can actually do that fairly informally, just typing in your comment. You're certainly welcome to take pieces of what we've written or put it in your own words, but HUD is welcoming our input, and we should definitely take advantage of it. Okay, so let's see, really quick, we'll do a few more things and close up. So on the HUD performance reviews, so there was a call this afternoon. I had blocked out 2 hours. Turned out to be a 35-minute call, so much smaller than we had expected. There is a new 9910 form. That's the checklist that's used for when HUD is doing a performance review. As Sarah mentioned on our call a couple weeks ago, it's no longer the biannual performance review, no longer BPR, it's just a PR performance review. They won't necessarily be every 2 years. Some could be every 3 years. Some might be 2 years. Some might be, when there's problems, every year for some period of time until things are corrected. And the other innovation is that some of them may just be desk reviews, meaning that you'll get the checklist. Part A, HUD fills out. Part B, the counseling agency fills out. There's a Part C, and that would be specific to agencies that use reverse mortgages, that provide reverse mortgage counseling. So only applies to those specific agencies. And you would just simply supply the documentation that's required. You would self-certify, which means you check yes in the box, but then also back it up with the documentation and send it to HUD. HUD then could follow up either with a phone call, correspondence, or doing a site visit. We're saying we'll get 60 days notice about when the site visits will be, and that I didn't quite get this, but I think what they were saying was that you need to respond, but that 15 days before the actual scheduled due date or performance review date. And they were quite clear that they really felt like they've cut down a lot of the work in the performance reviews, so that an example they used was that you won't be sitting with your HUD person saying, are you a 501c3? Yes, check, we're a 501c3, because you'll have sent that documentation in already. So you'll have the housing plan in place, your disclosure forms will be in place, and they will check to see if the appropriate disclosures are contained in there. They heard loud and clear a problem that many of you have raised, and we've raised through this forum and others, that there was a lot of inconsistency about the reviews and what people looked at, and that things that came down hard on some offices would go lightly in other offices, and some issues that weren't even looked at in some reviews were a big deal in others. And they're really working hard on making it more consistent. So once this is in place and there's some field testing, we'll be interested in hearing what people's experiences are. unfortunately, you can't Google HUD 9910 and get the current form they're working on. They said you could do it through HUD Clips, but in fact that form is still an out-of-date form. So they're going to send out the 9910, the new format for the 9910, and if they circulate it widely, we won't put it to the list. But if it's just sent to the people who are, for example, on the call, then we'll post it on the list so people can see it and get a sense of what all is in there. But hopefully it will make your life somewhat simpler and require less of your time to do these, and especially after the last, after the first one, where you've established a baseline of information. The we have, through the Americans for Financial Reform, had meetings with Treasury around, we've been trying to push to get HAMP funds to be made. Well, there's a lot of unspent HAMP money, potentially as much as $18 billion, to get that to be used to get better resolutions for people, to get help deal with people's delinquencies more, to fund housing counseling, to fund outreach, and the conversations are getting in the weeds in a reasonably good way. So there hasn't been huge breakthroughs. One thing that's come through this that Treasury really did on its own is to extend HAMP until 2016. So added 1 year on to the life of the program, and are considering whether they might extend it further as well. There's been a lot of talk about what to do about the interest rate resets. So people who get to the 5-year end of their modification, then the modification still is in place, but the rate can rise 1 percentage point each year until it reaches what was the market rate at the point when the modification was first originated. So potentially for some people, that could mean they have currently a 2% rate, and it could go up to, depending on the timing, maybe as much as 4.5% or 5%. And as a lot of you have said, that this is going to be a major problem for people. Where we had originally argued that they should reconfigure Tier 1 HAMP modifications so that they could keep people at the 2% for the life of the loan. Treasury has argued that there isn't a way that they can do that mechanically, that the way that Tier 1 is set up, it can't be adjusted that way, but that they would like to use Tier 2 for that methodology. And the good news about Tier 2 is that it's a life of loan resolution. So, you don't have to worry about any more rate resets once you've done it. The bad news is that it's really not tied to affordability. Tier 2 is a program that has that's tied to market rate. They've lowered the market rate 0.5 point. They had a risk factor built in, and so it's 0.5 point above market. So that'll bring it down to market rate. But current market rates, what, 4.3, 4.5%. So this could still be a substantial jump for people. So we were arguing if they want to pursue that, they have to go down much lower on the rate. And one way to do that is just to kind of uniformly go down for people to match what people are currently. Currently, Tier 2 is not tied to affordability, so it's a problem. And so the resolution that we've got is maybe they'll figure out a workaround. We're also working on outreach for getting a much more comprehensive approach to outreach done that really guides people to counseling agencies and to the local counseling agencies. and they've agreed to do a separate meeting around this. And so if you're very interested in outreach and you're really good at it, we're trying to figure out some good comprehensive ways of doing this. It's a difficult conversation because of their resource issues and legal barriers, but if you're interested, let me know and we can bring you into the conversation. We're still pushing and trying to get post-mod counseling available to groups broadly that provided the original modification. Looks like there's some interest among some of the servicers, but not all. And when that becomes available, we'll certainly tell people more about it. But you're advocating with the servicers that they should be letting agencies that have helped people get the modification also to do the post-mod counseling would mean would be very valuable right now. Very quickly, the last point is on the independent foreclosure review, and there's probably going to be about $400 million of unspent or actually uncashed IFR checks. And right now, as you know, we've been pushing that money go to a big program for housing counseling to help people recover from the recession and do some more of the credit counseling stuff that groups do but don't get paid for. We're having a real tough time here, and just so that you're aware, while we had high hopes for the program and thought we were getting real traction with it, the OCC appears to be very committed to escheatment of sending the money to the states so that they can continue doing their collection or trying to find the homeowners and give them the money. Escheatment has a very low return rate. Matthew found a couple states where it was 2 to 5% of people each year actually getting the money through escheatment. We're going to continue pushing, see if there's some things we can do in Congress that might encourage the OCC to see the light. But right now we're not winning on this particular one. Okay, so it looks like we're out of time. Just a quick alert: the next call we're going to have will be on Wednesday, the 23rd, at 1 o'clock or 2 o'clock. We should check that. I'm
pretty sure we have it scheduled for 1 o'clock.
Okay, all right. And then Thursday, August 7th, will be the next one. And then we're not going to do a second call in August unless there's an emergency because it does get cut up with some people's vacations and stuff like that. But thanks for all the good work you're all doing out there. Thanks for the input. And use this opportunity to make your comments on the HAWC. All right. Thanks, everybody. Bye.